Hello, welcome to Spy Money. I'm going to show you a new indicator that we come out with this week. It's called the Spy Money Balance. The Spy Money Balance works off of levels, and I'm going to show you how that works now. This is the U.S. Open. For my time, I'm on Eastern Standard Time, so 9:30 will be the Open. And the way it works is you have a teal line, which all of these levels can be changed, whatever colors you want, whatever style you want, the thickness and all that. But you'll have a teal line by default. Over here it says SPY Money Balance, and it's 1401575. That was the balance for the U.S. Open on Friday, March the 18th. Whenever you open above it, that means it's long bias. When you open below it, that's short bias. In this case, we opened above it, so therefore we want to take longs. Now that's not to say that it won't ever come back, because it will, just like it pulled back here. But let's just dissect this a little more and show you how that it can work for you. You can start trading it sooner if you like, but if you wait for the open and you want to trade the balance of it, you can have a profit entry, right, or not a profit, but a entry right here. And what you would do is you would come up above it, and then you would come down and hit your buy limit. You would grab your buy limit, and you would bring it down here. And I don't put it right on the balance, I put it above. So when this come up and hit it, we would actually be in a trade right here. And you would set your ATM strategy according to how you trade. I have mine set where it just gets on the chart and then I move it accordingly. In this one, once you enter, and it enters the trade right there, then you would actually be looking for this red line. Now we get right real close to it, so what I do is I have my profit target. I'll set it up in here in case it would take off running. And when it gets real close, I will put my stop right there. So I'll have it in my hand. So to give you an example of how that would work is, let's say your stop is let's say your stop was right here initially. When that's going up, I've got it clicked and I'm holding it and I'm moving it. And once that gets real close up here to where I think it's going to go, I'm going to click my stop in case it comes down and hits it. I'll take my profit there. So in this case, my profit target would actually be around $750 if I had my stop right there. Now, more than likely, when this comes up and it closes, I will usually candle chase. So when this goes up and then pushes up, it closes right there. That wick right there is telling me it's probably going to go ahead and sell off, possibly. So I'm going to be about halfway at my candle. So in this trade, realistically, I would have been about 460. Now this next one, once it comes down, I don't do anything. I wait till it comes down, and then once it goes below it, I put my entry right above it. So in this case, we would have an entry right there. And when this pushes up, again, when it starts getting up here close, I've got my stop in hand, and then I'm going to be dropping it about right here. In case it pushes up, if it pushes up, great. If it goes and pulls back down, which it did, I'm going to take profit. So that's about $800 that potentially you can make there. Now when this comes down again, I'm not going to be in the short. When it goes down below, I'm going to have my entry there again. So now our entry is right here. When that pushes above this profit target and goes on up, I'm going to have my stop right here. So this one I would be about $900. So there's three trades. One's about 8, one's about 9, and I think the other one was maybe 6, I think I said. So right there's a really good day, and if you multiply that by your contracts that you trade, you could be done at this point off of this one indicator, not using anything else. And when it goes up there and hits that and starts to come back down, we're long bias, remember? So we don't enter a short. We go ahead and get our stop or entry right here. So when this comes up, we are looking to enter right here. And when this goes up and pushes through, we put our stop. We would get stopped out there. There's another roughly $900. And we would just keep on doing that as it goes up. Now, to give you an idea of how this actually works, is we have several trades right here right off the bat. And as long as you play your stop accordingly, you're fine. You might have just got in one trade and just weighed this out and just let it go. I'm a scalper, so I'm looking to take those profits in here. And usually at the open will usually have a lot of whipsaw back and forth. But if you're playing off of this balance, you can usually pick up some profit in there. Now, I don't personally trade with a 1 minute bar. I trade with a 144 tick. I like it better, and I'm going to show you how that works in a second. But for now, I'm going to show you the 1 minute so you can see less candles and how it's working. And a lot of people trade with the 1 minute candles. That's what reason I'm showing you this. So again, once this comes down, you have your entry there. You play it to here. On this particular one, you may have stayed in one trade all the way. Based on this right here, it's a good chance you might have. You know, I probably would have stopped out and then taken off, but let's just say that you were about there and you played it up to this one. So there's $1,900 on that one. The most that you could have made, which you wouldn't have done, would have been $2,500. Once you're up that much, it's hard to let it pull back $600 on you when you could just take that. It depends on what your goals are. Again, this right here, it plays, you have your pullbacks. Now, when this third pull come down and push up, you probably would have lost right here because you would have been playing off of that. You might have lost right here, or if your stop was, depending on where it was, you might have been able to stay in the trade. And then when it pushed up and then kept on going up, maybe you didn't like it and you broke even, or maybe you did have a loser. It really kind of depends on your trading style. Me, I probably would have been in a long here, and let's see, from there, just to give you an idea, probably there to there. So I would have lost money right here. I would have lost $300 because I usually have about a 15-point stop on ES or NQ. So I would have lost money there, and then I would have entered here. It wouldn't have stopped me out there, and then come up. This is, probably when it went up, I probably would have just put a break even, and I would have just lost this one and broke even there. When this pulled back, I may or may not have been in that. I don't know. Where this is long bias and coming down through here and making higher highs, I probably would have missed this. But I would have entered again right here. When this come down and pushed up, I would have entered here. And this one would have actually made money. I would have made a little bit here and then got in again there. So that's just how I trade. It depends on how you trade. Where this one is a higher or a lower high than that. This one's a lower high than that. So that's telling me we're trying to trend down. Again, when this come down, I don't know if I would have taken a short right there. I don't think I would have. But when this come down, because usually it'll go up, retest, and then bounce, and that's what it did. So this one, you could have made money there. Look how close that is, though. We get this closer so you can see it better. To the tick, I mean, it's like there's 62, and it went up to 63, so there's 1 point away right there. And then this one, you've got 1275 to 10, so that's 2.25 points right here. That is very, very close. I mean, that's almost to the tick, as we say it. And, right here, we bounced off from it. We went up. And all this is automatic. You don't do anything. And this works on the London session as well. So you have this one, it pushed up, I mean, right up to it, then pulled back, got in it again. It pushed up. It actually hit it right here. I would have been stopped out here, and when this come down, I probably would have missed this move. And then right here, I probably would have had a losing trade right there, because when that pushed up, I would have thought it went on up, so I would have had an entry there. I would have had a losing trade right here. And then right here, I would have entered. It come up. I would have been probably a little more than break even here, because I would have been chasing candles the way this is working. And then over through here, when it starts going sideways, trading rule is when it's going sideways, don't trade. But you can see how it is playing along through here. A lot of times, when it does finally break out, it'll pull back to it, and then you get back in. It's just like a typical trading. Get in on the pullback is what everybody always says, and it works just the same here. The problem with most times is you don't know where to get in on the pullback. Well, this will actually show you where. Right there off of this line. And you look back through here, we went up through, we come right back and retested it, and then we took off. And this works on every day. So let's look at the indicator. So we're going to look at the indicator. We've got the show previous day, so we can turn that on and we can see the previous days on this. So when we go back, right here's the previous day. Now see how wide these are compared to these? They change every day. It works off of a mathematical formula that I come up with that uses on the London and the US Open. If your instrument opens on either one of those, it'll work on that instrument. If it does not open during that time, like for example, crude oil or UB, those two do not use the standard opening. And I'm going to update this indicator to where it would use those, and then you can check mark if you want to use them. So on this one, you can see that it almost went to it. It's not always 100%, but it almost went to it. You would have made a lot of money there. So if you'd have played off of this right here and went on up, and let's just say you stopped out off of that congestion, it's $1,300 roughly. And then when it came back down and went below, this first one I would not have been in. I probably would have stopped out on a long there. But when that came back down and then went up, retested, made lower high, I would have went short there. And it's hard telling where I got out, probably about right here. There's another $1,100. So, but on this one, we actually opened below the balance. So that's telling us short bias. In this particular day, we come back down, and so, it's staying short. It's trying to stay here. We made lower highs, so there's really, well, you would have got in right here. So there's one trade. From there, a potential of 1,000. There's a trade there. You may not have taken this trade right here. You may or may not have. It depends on what you're doing. This one right here, you would have actually entered a short because we are short bias. So I said earlier, I probably wouldn't have. When this come down, I probably would have just waited and got in right here. And that's where you could have made your roughly $1,600 down to the bottom if you would have taken the full trade, which I don't know if you would have lasted that long. But we would have actually been looking for this down here. We didn't quite make it. And then when we come back up, we're a little bit of consolidation there. This trading day is not the best, but you still have several good trades in there. And then finally, we actually break out. We come up, we retest, come right back up. Now we're starting to look more long because we're making higher lows. At that point, from here to right there, you would have actually kept on going the way I trade. That would have pushed on through. My stop would have been here, but it would have kept going. My stop would have stayed here until this kept on going. When it pushed up, I would put my stop there. When this pushed up to here, pull back to there, my stop would be there. This pushed up, pull back right there, so my stop would be there. There's $3,000 roughly that you could have made playing off of this. Once it stopped out, we don't take the short. We come down here. We go ahead and take a long. Maybe you don't get in until right up here. And what you do, at the most, would have been $1,000. You come back down and retest. You get back in a long right there. And you could have possibly made $1,800. There's lots of trades that you can do on this. And yes, you're going to have some losing trades. But your winners are going to outplay those. So if we come back in here, now we have a London market. So we can turn London market on, and let's just say you trade London only. I'm going to move this off the screen so you can see. Now on this one, those lines are going to leave because it is the US Open, and the London's going to appear. So now if you choose London only, London will go till the end of the day. If you choose US and London, you will have both. London will stop at the US Open, and then the US Open will start. So these do not overlay each other. So if you have both checked, which is what I have, here, let me show you. I have both of these checked now, and that will do it. You can also change the balance color. So if you don't like the teal, you can change it to whatever you want. You can change it to a dot or dashed or whatever. Change the line thickness. You can also do each one of these take profits. Then you can go ahead and change those as well. You can change the opacity if you don't want them so bright. I personally like them like that. I want to see them. But that's how it works. It does a good job. It is with anything, not 100% accurate, but you can see that it gives you a very good place to go. I mean, that's not far off right here. One was like a point, and one was what, two and a quarter point or so. I mean, look at this. That shows you how accurate this is, and it works really well. It went right up to the tick there, and then come back, barely pushed through, barely pushed. It works very well. When you incorporate this with your, maybe you have a moving average that you like, which a moving average doesn't show where the exit should be as far as your take profit. But I tell you, one of my favorite ones is adding it with the shaker indicator. And when I add it with the shaker indicator, it does an exceptional job. So if you look at the shaker indicator and you see that it's blue, that means you stay in long. So if you played the shaker indicator alone, you would have been in here, and let's just say you would have got out right there. So the shaker would have got you $3,200 roughly. So on this one, the way it's playing out, you have your balance, so your entry would actually be a little quicker. So your entry would be there, and then when you come up, you got real close. You could have played that long. Maybe you played it up to, I don't know, maybe right there. And then you come back down, you would enter again right here. You played it up to there. The shaker is telling you longs only. And then you play this one, you go up, you put your stop right there. And then you play this one, you got your stop out right there. You play this one, your stop would actually be right there. And you played it off there again, and you went up, your stop would actually probably been right there, candle chasing. So you're looking at about $3,000 the shaker only, but this one, 7, 15, 25, 35, 45, 15, 9, it's roughly $5,500, we'll call it. We're going to be on the conservative side. So $5,500 if you scalped it with the shaker, and about $3,000 if you played the shaker only. Now, the shaker, you could also, if you just stayed in and just kept on playing this, and then when it come down, started coming back up, maybe you got out up in here, so right there's 37. You're still going to make more, potentially, if you have the balance with the shaker. So having this balance with the shaker is definitely going to be an advantage for you. To come back into the London session, you can play it the same way. The London session, your balance is down here, so you're wanting to take longs. So when this comes down, you're going to have a long off of there. So you would actually be long here. It went up, you would have stopped right there. We have a short on our shaker. Okay, so maybe you ended up taking a short all the way down. So if you did, let's do this. Your short would have entered right there, and you come down. You can see your profit targets when it starts right here is when your profit targets start coming in. Once you see that, you come on down, you push through. You're going to have your stop about right there, so there's roughly 690 there. Maybe you don't take this one because of that. You push up, come back down. Maybe you take another short right here, potential of $175. You probably would have almost broke even here. And then maybe you, once this pushes up, it comes back down, then you take a long right here. Now your shaker is showing that it's a long. But your balance would have got you in a little bit quicker based off of using the shaker and also looking at your higher highs and higher lows. So this one potentially, I mean, you probably would have been stopped out there 550. We're showing long, so we don't take the short. We get back in right here. Or maybe you get in off of the shaker. I mean, you could easily got off the shaker, going right back up. Potential of 240. You can play these two together, and it works out really well. You can also use it on the mover. The mover works really well. We'll show you that. I think the balance works good by itself, but if you have something else that will show the direction, it'll actually help you out. So let's get rid of some of these. If you use the mover by itself, it'll work really well too. A lot of people have purchased the mover. The mover, you have actually entered right here. You would have stayed in that trade the whole time. Actually, when this went up to your profit target, you probably would have been out about right here. There's 810. You come right back down. When this comes down, pushes through, you will be entering again right here. When this pushes up, you got green all the way. So maybe you stay in all the way. You come up here, it starts coming down, you get stopped out there. There's $3,900. So it really kind of depends on how you play, what your strategy is. It does work well with any kind of a moving average or a volatility meter or anything like that. So now, how do you purchase it? Well, there's one easy way to purchase it. And the easiest way is if you go to our website. The only way. If you type in balance up here, that'll pull up the indicator. So currently that's what it is. Now if we add this to the cart, down here you'll see some pictures. You'll also see this video you're listening to. If you purchase it, you're going to have more in-depth training on how to use it in a better way. That comes with the purchase. But if you go ahead and add this to your account, if you are a leaseholder, you're going to get a discount because we get 20% off anybody that has SpyBot lease. If you have SpyBot lease, you get discounts on everything on our website. If you are not part of the lease, then there's no discounts available for it. We only discount for the SpyBot lease members. So you go ahead and you can try to do your update on your cart, put that in there, then you can go ahead and get it. Once you purchase this, you get the download immediately. It'll work immediately, and also instructions on how to use it. That'll help you out. If you have questions on it, you can come up to the Contact Us page, put in your information here, send me a message, put your questions in. I'll help you out. This is, I get all of these emails myself, so if you send this, I am the one that responds. No one else does it. And if there's anything I can do to help, let me know. If you've got any simple questions or whichever. Also, you can sign up for free webinars and news releases. Whenever I have a public webinar, I announce it and I send it out to everybody so they can know, so they can get joined in. We also have a free NinjaTrader 8 tips and tricks course. It's 100% free, no credit card needed. Click on that and that will help you out. So let me know if you have any questions. SPY money balance is a great indicator. It works strictly off levels. Once these levels pop in, they do not change all day. They stay exactly where they are. So if you're a long trader, you could do like say you're a 1 to 5 trader or something, risk reward. If you went in down here and say you wanted a $300 loss at the most. Where is that? Right there. Then let's just say that you are trading that. You could trade this real easy. And let's just say you're doing a 1 to 8. If you did a 1 to 8, right there would be your profit target, the $2,400. So you could use this balance off of that and just use it as a target. So when this comes over, you're going to be roughly right there. They'll let you know where you would be. So you can play this on 1 to 5, 1 to 8, whatever you want to do. 1 to 10, some people do. 1 to 10 would be way up there, but it actually would have hit. Today would have done really well. That would have put you right above this one. But it's, in my opinion, it's easier just to trade it to these levels and scalp it. That's how I do it. Let me know if you have any questions. Love to hear from you. Join our Discord. I'll show you that real quick. I didn't show you that. Our Discord is free. And if you go right up here, click on this button, the Discord logo, and click your checkbox, start. That'll get you into our Discord. It's free. I don't charge anything for it. Let me know if I can help you. You all have a great day.